Welcome back to another video, guys, where we're going to be doing earnings before they come out. Today we're going to be talking about General Mills. General Mills is supposed to report on September 18th, 2024. Let's start by taking a look at our earnings EPS. For General Mills, it's supposed to come in at $1.05. Last year's EPS was $1.09. There's 8 estimates on this. General Mills has a market cap of $40 billion, respectively. Let's take a look at our charts here, starting with our General Mills 45-minute candle on our left, which is TradingView, and then we'll look at our Thinkorswim. So we are currently in a buy and trending above our 50 EMA line. We're just going to keep zooming out here to see what we see. We're topping out around where we had a big sell-off last time, or I should say just last week. If we look at our day candle here, we're currently in a sell, and our RSI may be getting overbought, but right now we're trending at just about the 85 RSI mark. Let's take a look on our right chart, which is Thinkorswim. General Mills. Let's look at today's. Today's been pretty up and down. I wouldn't say choppy, but it's just holding a range between 75.1 and 74.70. Going into earnings, it may ramp up because of the overall sentiment in the market. However, if we look at some news from General Mills, we can see what awaits their earnings. So Zach says General Mills is likely to register a top and bottom line decline when it reports its first quarter fiscal 2025 earnings on September 18th. The Zach estimates for review is pegged at $4.78 billion, which suggests a decrease of 2.5% from the prior year's quarter reported figure. So obviously, $1.05 now from a previous $1.09. Let's just keep seeing what it has to say about General Mills. General Mills has been operating amid a tough operating landscape. On its last earnings calls, the company anticipated the operating environment to continue evolving in fiscal 2025, which is good to hear, and also a cool word, evolving. It expects that the macroeconomic uncertainty will lead consumers to continue seeking value, influencing both the products they purchase and the channels they shop through. Now you have to remember that General Mills does a whole bunch of cereals and yogurts and other food products. However, they did just sell their yogurt brand. I'm not sure which one that is, but they did sell it. General Mills faces ongoing margin pressure from rising production costs. On its fourth quarter earnings call, General Mills stated that the rate of inflation for goods and services in the U.S. and many other countries remains above historic levels, even though it has moderated from recent highs. That means that their prices are higher than they used to be. Inflation is expected to impact the company's input costs in fiscal 2025. The company expects input cost inflation to be around 3 to 4% of the cost of goods sold, COG, in fiscal 2025, which labor being the primary driver affecting source, manufacturing, and logistics expenses. So if they can hold jobs and keep paying them well, then they will probably be striving as a company and evolving, as they said. On its last earnings call, General Mills stated that it expects first quarter results to fall short of the full year growth expectations. We can see it just had a rejection. Their model suggests a 10 BPS contraction in the adjusted gross margin to 35.3% for the first quarter. We expect the adjusted operating margin to shrink 70 basis points to 17.6% in the first quarter, General Mills states. Let's see what General Mills has been focusing on. Their strength of the brands is what they've been focusing on, as well as its accelerate strategy, based on 4 pillars that include building brands, undertaking constant innovation, leveraging scale, and standing for good. Ooh, okay. Zach Ranks currently hold General Mills at a number 3 ranking, holding neither a buy nor a sell, I think it says. Here it says here, our proven model predicts an earnings beat for General Mills this time, which is interesting to hear. As they said above, it predicts a top and bottom line decline. The combination of a positive ESP and a Zacks rank number 1, 2, or 3 increases the odds of an earnings beat, which is the case here. Like I said, it holds a 3 ranking. Well, that just about does it for General Mills here. Again, we can look at our candle. We're currently testing a range at this 75 mark from its a very neutral price target that it has on General Mills. If we go to our day candle on Thinkorswim here, we can just reiterate what we might see going into earnings. So it had a high of about $90, and it's at a neutral price target at 75. Analysts have rated it a price target from 62 all the way to 76. It found a bottom here at 62, a low at 60.33. So we can basically say right around $63 it found a low, just while it's consolidating. We can see we currently are in an uptrend from a higher low. We had a small rejection and then a backup of price all the way to our high again at 75.9. Going into earnings, we could see a drop back to 67 just to consolidate and then move higher. Or we could have a surprise earnings beat and move higher automatically. If they do report a top and bottom decline like they stated, then we'll probably fall back to at least 67, 62 range. But I don't think it's anything to be concerned about. Well guys, as always, if you enjoyed this video, please like, subscribe, and comment on what I can do better. Thank you very much and have a beautiful day.